This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil. I'm going to give you a stock market update. Had a lot of movement to the upside based on the election. Let's go ahead and get into this and see how strong this really is. Now, if you want to learn some of these techniques with respect to multiple time frame trading, you can start with my book. It's at rabilstockresearch.com/book for more information. Also, if you enjoy this content, please hit that like button and also subscribe. Okay, let's start out with the sentiment, and we really haven't changed much. It's sitting at 35% more bulls than bears. Not much of a shift from the prior day. However, based on the reaction to the results of the election, we have had a pretty strong move, and I have a feeling what you're going to see next week is a jump in this number. So something we're going to have to watch, but I don't think we're going to get that. Typically, that the updates come by Wednesday, so I think by next week, I think we'll have a pretty good idea of whether people are turning bullish based on this market reaction. All right. Now, the overbought oversold oscillator has moved up to 73%. So I moved that to the negative camp. And the volatility on the daily has jumped. I moved that to the negative side. Volatility on the weekly is still rising. I'm going to go into that a little bit deeper in a second. The trends are all bullish. So the daily trend turned back to positive, obviously, with the strength. On a momentum basis, the daily did turn positive, but I'm holding off on turning the momentum on the weekly positive, and I'll go into that when I get into the charts. So that's the update. Now, if you look at the way this is played out, we're starting to move a couple of things into the negative side, and it's possible we'll see this also next week, depending on how things change with the sentiment. But so far, from a trend standpoint, we're still in okay shape. And if we get a little bit of confirmation, we're going to have all of these bullish as well. Now, these, again, I've talked about this in the past. I have this separated for a reason. These are the primary indicators up here, okay? And then these are the secondary indicators that we use as kind of market conditions. And that helps us determine, how aggressive we want to be, how big our exposure should be, and or what kind of targets we want to take, how aggressive we want to be taking our targets, that kind of thing. So I think that's what this bottom half can help us with, whereas up in here, this gives us a much better idea of really the condition of the current market condition. All right, let's go ahead and switch this down because I want to talk about, just for a brief second, I want to talk about this jump here because, typically when we're looking at a jump in volatility, it's based on a decline in the market, not an up move in the market. And I want you to understand what's going on. So if we take so let's just use this bar's close, all right, and then the low of this bar, and we take that, and then that's the true range for that bar. All right, so that's included in the calculation. Remember, it's an average true range. The true range includes the gap. So if we look at the close of this bar and then the high of this bar, you can see this is a monster big bar. It's a green bar, but it's big. So this is probably, I could look at a few of these. I think this is the biggest bar on the chart. Now maybe this was the close here down to here. So that was the biggest bar on the chart, but this is the second biggest bar. Okay. If you take that to that, that's a huge bar. So it's having a negative impact on this indicator because when we see this rising, we're thinking that it's increasing risk. But this is a bullish reaction to the election. So I think we have to just maybe, it's kind of like when we have, there are times when the indicators just get a bad reading. All right. This happens periodically with the ADX indicator. And I've talked about this with subscribers as to when you want to ignore the ADX sometimes. I think this is one of those times where we probably want to be ignoring this as well, because this is a bullish move to the upside after some indecision in the marketplace. Obviously, it looked like bets were being made the opposite direction of what they thought was going to take place. And then it's almost like an earnings surprise where people were thinking that maybe the earnings weren't going to be so great. And then boom, you get a much stronger number than you'd expect. So that's kind of how I'm looking at this. Now, on the weekly, I do think this is more of a continuation of high volatility. I don't think that changes anything. But the thing I want to make sure you understand is just because this is rising, it doesn't mean we can't take trades to the upside. What I suggest is if you're going to play something that is more highly correlated to the market, then you take more aggressive targets, right? I suggest using a weekly average true range, but then maybe taking targets at 1R, 2R, 3R, and then trail a stop from there, like we do on the daily trades, as opposed to on the weekly where we're typically taking a profit at 1R, 3R, 5R, and then trailing a stop from there or something like that, or actually maybe 6R. Either way, the point I'm making is that you can still take trades, especially if you start looking at stocks that have a lower market cap to them. In the Russell 2000, which had a big breakout this week, or at least looks like it's having a big breakout. I want to see how it closes the week. But if we finish on a big green bar on that IWM, I think you have to respect the fact that if we're going to get strength going forward, there's a pretty good chance that it's going to come from stocks with a market cap under 15 billion. So just kind of keep that in mind. Let's go ahead and switch over. Now, there's a couple things I want to talk about. First of all, we've had we're talking about the start of a new year, all right? And I've mentioned this before. So the low month was the first month, and we basically have gone up the whole year. Now we've made it through the election. We've made it through another Fed decision, all right? And markets still holding very strong. Now, we've got the rest of November, and then we have one more bar left. All right. So what we want to do is I want to show you what the yearly bar chart looks like. If we were looking at this like it was a day, like this is a bar for just the day, let's say, and it's probably 3:15 for the day. It's getting late in the day. There's a pretty good likelihood that we're going to close near the highs for the day. In this case, we're pretty good likelihood we're going to close for the highs near the year. So we got to sort of take that into account and not get too hyperactive on any moves at this point between now and January 1st. I think. I mean, it's not to say that we can't reverse. And there's one thing there's a big fly in the ointment that we got to be worried about. That has not triggered to the downside, but is a reason why we need to be on guard. But right now, I'm sort of the opinion that maybe this is going to be pushed off into the new year, and we're not going to get a big reversal right now. Maybe we get a little bit of follow through into the new year, and then it flips over. So the one thing, as I mentioned, a fly in the ointment here is the weekly momentum. All right, and the reason why I have not flipped that positive, MACD turned back up with price. We still have a good look to the moving averages. We still have got a good trend in place, all right? And we do have some higher volatility associated with that. So that's one sort of problem, all right? And then the second problem is we still can't get the green DI to confirm this move. So if we compare this peak here, which is this peak here, that's one pivot high, and we've moved up from that, and we cannot make a new high above. We have not been able to make a new high. Now, obviously, if we get another green bar like this with some positive green DI associated with it, I think this will finally click in. If that happens, then we should expect this blue line, because then I would think the red line will go down, the green line will go up, and this is going to start moving higher. If you'd understand how ADX works, that's how this is going to play out. If we get this to break out, then we're probably starting a new expansion phase. And that would help this turn to the upside. Now, this index, because it's been moving so much, all right, even if this makes a new high, we've got to be careful. Maybe this just makes it back up to 25 or something like that, while this is pushing to the upside into the new year, and then it flips over. So there's still a possibility that this is a warning, a big warning flare, right, before we actually see the price action, because we were looking for a re-entry of the breakout to kind of confirm that, and it didn't happen. right? So it's possible we could get that later. Again, maybe it happens in January or something like that, but we got to keep an eye on this. But it shouldn't prevent you from doing anything because we don't have a confirmed sell signal at this point. All right. And right now we're still in a pretty strong trend year. All right. And then we go back to the daily chart, and while the weakness was here, it did actually find support. I think this was pretty close to the zero line. We didn't get red to cause this to go back above, and then obviously with the election, we've gotten a really strong move off of the zero line, and green DI has now popped to brand new highs. So I think we have to respect that. Now, one thing I did want to mention is last week, because of the situation we were in with respect to this, all right, we're willing to put on a hedge in the market. All right. Now, this is the reason why I use a hedge, is because I don't want to sell out of my stocks for this particular reason. All right. I don't want to have to be going into cash and then trying to get back long. All right. I want to hold my stocks unless they break down. But when the market is in a situation where maybe there's some risk involved, I might want to put on a hedge here. Now, what I said last week was we get a move to the downside, and I think it was I was basically saying, look, if we move up and we can form an RSI sell signal, then it's probably worth putting the hedge on. And in this case, we actually it was basically a pinch play with a lot of momentum to the downside. But look at what happened after that. In fact, let me just show you something. I want to switch this to a 10-minute. And you can see what happened. We had the RSI sell, but then look at the way this played out. It came down and formed a really nice pinch play. You can see the strength of the sellers, and then no real strength in the buyers, stayed low. And then we got a pretty nice little entry off the 10-minute with a pinch. All right. Now, if you're doing a hedge, you might not wait for that kind of entry. You might just put it on when the hourly chart clicks in off the RSI. No problem with that. But I thought I'd just mention how it played out pretty nicely. Now, the point I wanted to make here is that we got a move and it made a new low. You see how this made a new low? And yet MACD did not make a new low. RSI actually, RSI 20 did not make a new low. And the DI red, it did not make a new low. And neither did the green. It didn't make it didn't really confirm the move. So we had no confirmation off this low. Now that by itself isn't enough of a reason to take the hedge off. But if you notice the way this played out, it paused and then look at the big green bar crossing up through the 18. Now we've got strike number 2 against this trade. So if we're short this trade, we got strike number 1 is, failed confirmation on new lows across the board. Not one indicator confirmed that, all right? And then we get the big green bar, that's strike 2, all right? And then strike 3 is coming back up through these highs, and then actually strike 4 was closing back above the 40. So there are a lot of reasons why, if you're in this trade, and it's part of the reason why I hate doing hedges, because you got to sit there and watch it. I mean, if you're doing a hedge in this way, where we are going counter to the bigger time frames, then you have to watch this like a hawk. You can't sit there and just assume everything's hunky-dory, it's going to drop and fall out of bed. You have to watch and look for the signs. And there were 3 or 4 signs to tell you before the actual election came that this trade really wasn't following through the way you'd expect. All right. Anyway, that is the update for the week. Let me know if you have any questions. Thanks.